A very good evening and a warm welcome to Personal Finance. I'm Kukuletu Tsele. On tonight's show, we investigate how consumers can make the most of traditional savings means and also make use of modern techniques to hopefully boost their savings. On the show this evening, I am joined by Nitesh Patel. He's the head of personal banking or customer financial solutions rather for personal banking at Standard Bank. Sydney Sigese, who's a certified financial planner with the Financial Planning Institute here in South Africa, and in our Nairobi bureau is Jared Osoro. He's the Director for Research and Policy at the Kenya Bankers Association. Gentlemen, thank you so much for joining me this evening. Maybe it would be fitting for us to start off with a picture of the landscape, whether it's East Africa versus Sub-Saharan Africa as well. But Sydney, from your perspective, the trends regarding traditional savings in South Africa, how prevalent are they?
Yes, thanks for the opportunity. I think, traditional savings vehicles are really quite popular in South Africa, and what we found is that most Africans in South Africa use funeral savings account. Mostly about 53% of South Africans use funeral as a form of savings, and there's sometimes confusion in terms of using funeral for for savings, or using funeral for those expenses during a burial, So most of the time they use funeral most of the time.
Exactly. We spend too much on how we die and not sufficiently on how we actually live our lives. Nitesh, I take it you'd agree here, because stokvels are also a word that's very synonymous with the South African Savings Society.
Yes, absolutely. So stokvels can be traced back to the early 19th century, when the local people in the Eastern Cape used to pool their resources to buy livestock from rotating cattle auctions. Hence the term stokvel was arrived at. Since then, stokvels have become extremely popular, and they provide a contrast to what people believe that many South Africans can't save. Yet we have close on to 11 million people, probably around 800,000 stokvels, saving up between 40 and 50 billion rands annually through stokvels. And we still believe in this country that people say not enough of us save. But there is a traditional means of savings, and stokvels are extremely popular.
Jared, I'd like to come to you to get the view, obviously, from the east of the continent when it comes to traditional savings means. How do the average Kenyans tend to save, especially for those who don't have a formal bank account?
Thank you for having me in the show. First, the scenario in Kenya is not any different from it is in many African economies of the same level of development. We have a substantial portion of the population that is basically subsistent, essentially producing what they consume. And that type of population is in many ways saving very little in the formal sense of saving. Not least because they don't have access to the form of financial infrastructure, but most importantly because their incomes are not that significant for them to save. But having said that, that particular population tend to save first in using non-financial instruments. Whatever they produce and they're not consuming, that could be in a way considered to be savings. But beyond that, they also have other informal ways of savings, including belonging to local saving groups, and therefore not necessarily saving in the formal sense of the word.
We do know, Jared, to stick with you for a moment, that technology has certainly played a significant role on the East African landscape, especially in Kenya. Is that also playing an impact maybe in allowing consumers not only to transfer and transact using technology, but also having a savings pocket attached to some of these transactions that take place?
I think in the recent past, and you're right in mentioning that technology is now becoming an important player insofar as enhancing the capability of households to save. Initially starting basically as a money transmission mechanism, but now being used for purposes of intermediation. We are seeing a number of people who previously didn't have access to formal bank accounts now being able to open bank accounts using their mobile phones, and therefore having the ability to mobilize mobilize savings that way. Remember, the mobile network operators who pioneered this technology are not in any way licensed to mobilize savings. The partnership that we are seeing happening between the mobile network operators and the major players in the financial sector, particularly banks, I've seen now technology using that platform being used as a mechanism for enhancing savings amongst households. Essentially, therefore, meaning that households are now using technology as a mechanism of enabling them access for more financial services through savings, and subsequently then going into acquiring or accessing credit using the same platform.
Nitesh, I take it this is very different, though, from the South African landscape, where mobile money, it's slightly picking up in the market, but people tend to deal more with formal bank accounts, especially the traditional savings groups like stokvels or investment clubs. They tend to have financial products with a bank and would rather keep them in there for a short-term period, anything from 6 months to a year, and then distribute the returns that way to each member.
Yeah, I think we can separate the stokvels into three kinds of groups. Despite them being all common purpose savings groups, we find that there are those that support, or those that put their money into the banks, so that's through a formal banking system. And banks need to do a lot more to enable these groups to transact via non-traditional channels. So many of them today come into the branch to deposit money or to withdraw money. We're now enabling them to deposit money through auto banks and through electronic transfers. And we're in the process of developing alternative mechanisms for them to take their money out. So this would be in the form of instant money or prepaid cards, where we enable them that they don't have to come into the branch to take money out. The second kind of group are those that don't use the traditional banking system, but they save, because they're saving for groceries, and this is one type of saving, because they're saving for groceries, they go to some of the national retailers and they put their money in at the retailers for a period of time, and at the end of the year they get a discount on their groceries, and that's how they operate in their stokvels. And the last kind are those which we'd like to move towards a formal banking sector, and those people are keeping their money, what we largely refer to as under the mattress or on site in villages, and that's because they're skeptical about financial institutions and charges associated with banking. So we need to do more as banks to encourage these people to keep their money safe with the banks rather than keeping cash at home.
Sydney, to come to you, is this often a theme that you find either yourself or your colleagues tend to capture when we're consulting with individuals when it comes to their savings? Are people still skeptical of using the financial markets or financial products and tend to have some money away in a kitty? In other words, does informal savings play a role in one's financial planning?
Yeah, I think it's got also with the history of having tangible cash in hand and easy accessible. But what investors tend to forget is the debilitating effect of inflation. So each time you don't invest or save that money, you'll really be doing injustice in terms of the value of the cash that you're holding. And just on what Nitesh has said, the challenge with using accounts for easy access of money is that you tend to be tempted to use that savings for short-term pleasure.
Which is what we don't want, actually.
Yes. So I think when designing a mechanism of using maybe a credit card and a portion for savings, we need to be cautious of how investors would tap into that savings element.
Jared, let's come to you to get more perspective. We heard about the money that's potentially kept under the mattress or in a jar somewhere at home, and the bridging of the informal sector with the formal sector. In Nairobi and in Kenya overall, are you still struggling to maybe bridge that particular divide by offering consumers not only with appropriate financial advice, but also appropriate financial products where they basically are certain that they'll make a positive return on their investment?
What we've tended to observe in the Kenyan market, at least over the last decade, is a picture where utilization of technology is minimizing the resort to the traditional ways of savings for many households, and that's for putting money under the mattress, literally, increasingly diminishing. We are seeing a number of players in the financial sector, not necessarily banks, but also other players in the financial sector, including insurance companies, part of the capital markets, and pension funds, using technology as an avenue of mobilizing savings. And therefore, unlike at the initial stages where we are seeing the mobile technology being used basically for transactions, we are seeing it as an avenue for mobilizing not just short-term savings, but also long-term savings, because many of the households, especially those don't have formal jobs, are now resorting to taking advantage of the products that are being rolled out by the pension funds to mobilize long-term savings. Secondly, we are seeing the partnership that is existing between the broader framework of the financial system, taking advantage of recent developments in the landscape, including aspects like agency banking and cooperative societies, which are all over the country, to use this platform for purposes of mobilizing savings. So essentially, we are seeing players in the financial sector rolling out products that are targeting households and small businesses that previously didn't have access to some of these formal saving avenues.
Just before we go to an ad break, Nitesh, I want to get your view on what Jared has obviously alluded to as well, which you've also highlighted, is reaching that untapped, unbanked market. Are we winning, especially given the fact that there's still a strong amount of fear? And Sydney alluded to the fact that maybe when it comes to saving, people tend, especially in South Africa, to invest and save heavily for funerals to ensure that when we say goodbye to you, you know, it's done in a decent or respectable way. But are we finding that banks, and in particular the one that you represent, has products which are able to assist consumers in these needs and maybe even open up their eyes to other reasons for savings other than funerals, hopefully?
Yeah, I think that the issue of financial inclusion is probably a subject on its own. But we're certainly finding that we've made great inroads towards banking major portions of the population that were previously unbanked, and certainly over the last few years we've expanded our reach into that market significantly together with the other banks. The products and services are not following traditional means anymore, traditional roles anymore. As banks, it's our job and responsibility to go out and understand what our customers really want and the channels in which they want to operate in. So at Standard Bank, for example, we use our Access banking platform where we combine the benefits of our Access account, which is literally a free account where you pay as you transact per transaction, and we've got Access points based in all of the local townships so that people have easy access to transact within those Access points. So combining the effects of an account with a channel through which people can access is certainly making financial inclusion a reality in the country.
Well, we certainly hope it does, and it is something that will have ripple effects onto the rest of the continent. But we'll continue with our discussion. We're going to take a quick ad break. We'll be talking more about traditional savings means and how we can access the formal market by bridging the divide here on Pan-African Personal Finance. Stay with us. There's more after the break. Welcome back to Pan-African Personal Finance. We still continue our conversation, taking a look at traditional savings means in the African environment. And I'm joined by my guests in our Johannesburg studio, Nitesh Patel from Standard Bank, Sydney Sigese representing the Financial Planning Institute of South Africa, and Jared Osoro, who is from the Kenya Bankers Association. Now, before the ad break, we were talking about bridging the divide and allowing consumers to access the formal market. But Sydney, when it comes to you, when you consult with some of your clients, is it important still for these consumers not only to access the formal market, but because stokvels are what we were talking about, a cultural and social experiment, is it advisable for them to still continue having some money set aside for these informal savings groups?
Sure. As a certified financial planner, you have to conduct a needs analysis, and obviously during your initial interview with a potential investor, you would have to assess what their key needs and wants are, ensure that the basis is covered, and once you establish their interests and their cultural interests, then you might accommodate traditional savings vehicles like stokvels. And I think as a financial industry, we really have a lot of opportunities in terms of tapping into stokvels, because as Nitesh has said, there's quite a lot of savings that have accumulated over the years. So it's a consideration when you do a proper financial planning. So it needs to be considered as part of the plan.
On this opportunity that you make mention of, I think, take it for both of you, it's an interesting one to observe, because we both alluded to the fact that it's a social experience. So whilst you want people to get significant returns from their savings and investments, but they still need to feel like Nitesh, Sydney, Jared and I, we're part of a team and we're all going to make it happen, because fundamentally that's where it starts, right? It's who you know that you're saving your money with, and these are individuals that you trust, because more often than not, you have a very close relationship with these individuals, right?
Yeah, absolutely. So I think that the basis on which stokvels are formed are essentially that people come together, for people who know each other, come together with a common purpose in mind, and they understand upfront that if they put the money together, they get a better return than each of them individually trying to invest that money. And I think that's the basis on which all stokvels are founded. So if we follow, you have to follow through on the principle that people who know each other come together for social gathering. And that's one of the great things about stokvels, is that it's a social gathering. People understand each other, they have a discussion, and they have a nice meal together afterwards, which is usually the case, or they have a meal while they're having their meetings. So those are the bases on which stokvels are founded, and one should always stay true to those principles.
Jared, I'd like to get your view here. Sorry, Sydney, you wanted to say something before we come to Jared in a moment?
I just wanted to add also that stokvels provide that discipline in terms of adhering to regular investing, so that can also be integrated into a proper financial plan for that individual, to say you are committed on the stokvel, so you can also be committed on a typical savings investment vehicle. Okay.
Jared, to come back to you for a moment, it seems as though the common theme here is people, and that's the tricky element that financial services need to understand when appealing to investment clubs, especially in the informal sector. In the Kenyan experience, is this something as well that you've had to be cognizant of when it comes to providing the right products to these consumers?
I think the Kenyan market has seen more or less what one could call a proliferation of some of those investment clubs involving a number of individuals with common goals and common aspirations, and the financial sector has taken advantage of that to enable those groups not only save but also invest using those resources. Now, what we've seen is, at least at the formal level, those clubs have become very successful, and so successful that almost every financial institution has tended to structure products around groups. Even at the informal level, we find that banks are taking advantage of those group organizations to see how they can tap into those savings and bring them into the formal financial space, because the households at the informal level continue to mobilize those savings, and when those savings become substantial, they have to find their way into the financial system. But remember, a typical household looks at two things basically when they're looking at savings: the ease in which they can access those resources and the kind of returns they can earn from those resources. Studies have been conducted in Kenya that confirm that households generally, and especially the poor households, lead a very sophisticated financial lifestyles, in the sense that if they have unpredictable incomes, they want to have a mechanism of smoothing their cash flows. So belonging into groups like those enable them to be able to access resources when they need them, and it's even better when now they start putting those resources in the formal financial sector that enables them now to either access credit when they need them, or get a return to their savings if they become substantial enough to earn an interest. So essentially, we are seeing the financial system really looking at this in a very positive manner, and in a way trying to bring what typically was a very informal groups to the formal financial setup.
Nitesh, from your view, does it make the bankers' work even more difficult by convincing them that, hey, the 6% might be guaranteed, despite the fact that it's not as exuberant a return versus more than 30% in a day?
Yeah, I think firstly it's unfortunate that we find people in our society who want to take advantage of other people, and particularly they take advantage of people who are not so clued up on financial instruments. So the first thing for me is, if we stick to the concept of what a stokvel is that it comes together because people know each other from a community, and they come together for a common purpose. That's always important when considering your investment decision around a stokvel. The second one is that there should be some governance principles in place around any stokvel, despite it being people knowing each other. That includes a constitution, so there should be a formal constitution in place which has rules and outlines who the governing members are, what responsibilities the governing members have, how much each person has to contribute, where will the money be invested in, what returns will we get off this investment, and any return, like Sydney said, any return that sounds too good to be true probably is. So one should look for a constitution and the rules around the rules of the constitution, and that they make sense to you as an individual before you enter that particular investment club. The third one is that these investments should be, if they're giving you a great return, they should be invested with a reputable financial institution.
Yeah.
The last one around stokvels is, and most people don't know this, but there is actually a national stokvel association of South Africa, and any significantly large stokvel will be registered with the National Stokvel Association of South Africa. So you could go to the National Stokvel Association and check if the stokvel is actually registered. But I always say that you come back to the principles of a stokvel, that it's founded by people who know each other and save towards a common purpose.
Well, there's certainly lots to learn after the lot that has been said today on the show. But Jared, let's start off with you. If there were key 3 takeaway points that viewers had to be cognizant of when it comes to managing their informal savings and getting exposure to the more formal environment, what would they be?
One of it, obviously, is that there's a big opportunity in trying to formalize the informal savings because the people involved in informal savings essentially are aspiring to have good returns, and also aspiring to have predictable cash flows. So that opportunity needs to be utilized by the financial institutions largely to structure products that benefit those groups. The second is that it really is very important to take advantage of the developments in technology to broaden the base upon which some of these savings are mobilized, and experience in markets like Kenya have demonstrated that you can easily do that. Third is the fact that we are seeing people in investment groups, of course, having those aspirations to earn a return, but unreasonable returns. And for that, they need to be more organized. They need to be having a formal structure that enables them to ensure that their savings are safe and secure, and they're able to earn a return commensurate with the kind of investment they have undertaken. So those really come out as some of the key issues out of what we've discussed.
If we come to you, Sydney, your key takeaway points for consumers to remember?
Yeah, I'd say diversification is the second one after compound interest. So I would classify any financial plan as either savings, investments, or risk cover. So consumers need to be aware that there's not only one saving vehicles, there's not only one investment vehicle, and there's also not only one risk cover. So we need to classify those.
Exactly. Okay. Nitesh, from your end?
Formalization of traditional savings is extremely important, so as it gives that group of people a better chance at making a better return on their investment. And I would caution people to not seek for exorbitant returns and be cautious on your investment.
Exactly. Well, some powerful words to end off the show today when it comes to managing the balance between traditional savings and accessing the formal environment. Well, that's where we leave it for tonight on Personal Finance. A big thank you once again to all my guests, Nitesh Patel, who's the Head of Customer Financial Solutions for Personal Banking at Standard Bank, Sydney Sigese, who's a Certified Financial Planner with the Financial Planning Institute of South Africa, and from our Nairobi Bureau is Jared Osoro. He's the Director for Research and Policy at Kenya Bankers Association. Don't forget that you can get in touch with us on Twitter using our account name at CNBC Africa, #Finance410, or even to myself at Kukumfupi on Twitter. We look forward to hearing from you. Until next time though, take care everyone.